GM, today we'll be learning how to trade systematically and then profitably. So we will be going over what is systematic trading, the key components of a system, how to design a trading strategy or system, managing the risk and execution, which is probably the single most important one. So, what is systematic trading? It's rules-based approach that relies on rules, entry, exit, and stop loss, so you don't have any discretion, and it removes the emotions so you can be consistent with your trading. And of course, there is automation potential because an AI bot or whatever, a trading bot, could run the rules because they are completely objective. But that's not important for complete beginners, but that is just, something that can be implemented. And then objective execution. So since it removes subjective judgment, systematic trading supports backtesting, which is the most important thing, optimization, and reproducibility of performance. So essentially, it can be recreated, the results, essentially. So how do you design a trading system? You first need the entry and exit rule, of course, as well as the stop loss. Stop loss is pretty much the single most important thing, because that is what determines you from getting liquidated or losing too much, or that's basically it, getting liquidated or losing too much. And since you have a system with exit and entry rules and a stop loss rule, it makes everything automatic, where you're just the button clicker and you just click the buttons and let the trade run, right? And you can use indicators like moving averages is the one I use the most, but there's there's too many indicators, and simplicity is best. So focus on simplicity, because like I said, there's too many indicators, there's too many concepts, there's too much stuff. So trading is all about removing the stuff you don't need and essentially using one or two concepts that you go inch wide, mile deep on, and focus on that for a strategy or system. So price action trading concept. This is the single thing that you need. There's no indicators in price action. So breakup structure, this is what it looks like. Kind of. This is an AI generated image, so it's not really the best description. I will make a video with price action trading concepts specifically, and I'll make a whole presentation just like this and show you on the chart live how it forms, what it looks like, because charts are random, there's wicks, there's everything, but breakup structure, it occurs when the price breaks through a key support, and then it actually doesn't signal a shift, it signals continuation. So not a shift, but market structure break signals a shift. And so breakup structure equals continuation. Market structure break equals a shift, so a reversal. That's the difference. And then there's reversal patterns. There's a whole bunch of chart patterns, obviously. But the main chart patterns are reversal patterns, like double tops, head and shoulders, and FTRs, failure to return. And yeah, you can build a whole system on a reversal pattern implemented with a breakup structure, and that could be where you enter, let's say right here, let's say right here, and then your stop loss goes right here, and then because it broke structure, it's going to continue downwards. Or I guess that would be a market structure break. This image is not very good, but risk management, the single most important thing in trading. This determines a winner versus a loser, because winners and losers can have the exact same win rate, but the loser just loses more than the winner, and that determines the profitable trader versus the unprofitable trader. So with a system, with a set of rules, your stop loss or your position size is automatically determined based off of where your stop loss and entry goes. So you don't need to know how much you need to put on the trade. because the system will tell you how much you can put on the trade to lose, let's say, $10 every single time. And that's why risk management and stop loss is the most important thing. So, yeah, we already went over stop losses and diversification. Ignore that. I don't even know why that's there. So, backtesting. This is how you find a profitable system. You take a set of rules, you run it through, you go to the charts, you press bar replay mode, and you run it through the charts, and you take 100 backtest. Essentially, they're like paper trades, but they're not paper trades. But they're essentially fake trades, but they're real trades that would have happened in the market. So you can get the performance of a system without risking real money. And yeah, it'll get you key metrics like your win rate, which is not that important. What's the most important is your risk to reward. Essentially, it'd be called expected value. I should have made a slide called expected value. And that is what actually determines a profitable system. And yeah, backtesting helps determine the profitability of a system. They don't directly translate, obviously, because you're using past data, but we can only go on past data as traders because that's what's there, and we're lucky that we can go back in time essentially and take trades that would have happened to find out if that system is profitable, those rules, and then we take them in the future, and most likely those are going to be profitable in the future. That's the only way you can create a system systematically. So, final thoughts. What's the key to profitability in trading in the long run? It is time. Nothing beats time, because it's just like the saying, time in the market beats timing the market. We all know that saying, and it's the most true thing ever, because you could get lucky in a month and gamble essentially and make a lot of money, but that's not repeatable, that's not replicatable, and it's just gambling, right? So systematic trading isn't about finding the perfect strategy. It's about finding a process that can be evaluated with discipline, and it can be monitored and refined over time. And that's how you stick to your plan and trade consistently, because you have the confidence and conviction that it was profitable in the past. So you can take that in the future and run it live to have profits in the future, essentially, or in real time, I guess. And yeah, that's it, essentially. And that's why you need a system. I'll make a better video on how you actually create a system, but this is why you actually need a system. Everything I went over here, so you can be profitable with no discretion, no subjectivity, and run the system exactly how it performed in the past, and then it has a high likelihood of performing the exact same in the future. So that's going to do it for this video and presentation. And like I said, I'll make a video about how exactly to create systems and the exact concepts you need. So stay tuned for that. Peace out. See you guys later.